Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me are Sonia Shenoy and Pavitra Pari. Good morning, girls. Another very quiet opening for our market. Things have been very listless, range-bound on the index level. All the action has been on individual stocks, where stocks are reacting to earnings hits as well as misses. But now that the earnings season has also come to a close, perhaps we could enter into a bit of a quiet period. There are no big major global local triggers lined up for our markets. Yesterday we had the CPI inflation number, so that's done and dusted. Earnings season has come to an end, so perhaps things could be a bit quiet. What we are seeing is a lot of outperformance coming in from the Asian markets, emerging markets. So today as well, Hang Seng is up close to about 3.5%. Taiwanese markets are up 2.5%. The Chinese markets have gained close to about 1.5%. This is despite the economic data coming in a bit subdued. Month to date, the Hang Seng is up 25%, while the Nifty is only up close to about 1.5%. So now that things are, stabilizing on the global front, there are talks about perhaps Chinese markets could reopen. You are seeing some money, some catch-up being seen in the emerging markets as well as Asia. But pretty quiet, right? In terms of stocks as well, I think from tomorrow more so.
From tomorrow. For today, we're at least getting the last of the big earnings coming through, right? So a lot of the, the likes of ONGC are in focus because of their earnings. So that one is doing well. Some of the other PSUs also holding up, the likes of NTPC. And you're seeing a lot of action in the auto space as well. These are some of the gainers in this otherwise very quiet kind of market. On the downside, it is largely tech. So some of the bigger names will be up for you, the likes of Tech Mahindra, TCS, which are in focus. And some of the mid caps will also come up. Something that we should perhaps watch is what's going on with the crude prices. There's been a big dip overnight to almost 92. So, Sonia, I guess that will be something that we can watch even in the absence of, any major trigger for our markets.
Absolutely. It's so quiet, right, today. I mean, we've had a couple of days where the market has just sort of taken a pause, a bit of a breather. We are still just inches away from the all-time high, so it's just a matter of time before we get there. But so many stocks to talk about, so we have our entire research team to pump it up for you this morning. They're all here with us. There's Sonal, Nigel, Vivek, and of course I'll tell you about some stocks as well. But what tops our charts this morning is ONGC. It's higher in trade post. It's Q2 numbers. Sonal, take it away.
Thanks a lot for that. Well, yes, strong set of numbers coming in from ONGC, and it was not just good numbers, it was a big beat versus the parameters. Of course, quarter-on-quarter numbers were lower because of lower crude prices. But look at the numbers versus the poll. Revenues at 38,320 crore rupees, which compares with a poll of 35,560 crore rupees. EBITDA at 18,811 crore rupees, which is 1,000 crore higher than the poll, which was coming in at around 17,000 crore rupees. Margins at 49%. Yes, they have declined on a quarter-on-quarter basis, but profits also 3,000 crore rupees higher than what the poll was suggesting at 12,825 crore rupees. Surprisingly, net realizations, that is crude oil realizations, they have come in higher than what the street was working with. It is a 37% YOY growth versus an expectation of just 7% YOY growth, and the number has come in at $94.96 per barrel. So good going for ONGC. Now the next thing to watch out for will be how the windfall taxes are decided every fortnight. That is the way, and also crude oil prices. Overnight they were down, but we need to watch out for the trajectory. But net oil realization strong at $95 per barrel, and that's why the stock is buzzing in trade.
Okay, thank you very much for that. NMDC is under pressure after the company's second quarter earnings missed estimate. Nigel is standing by to give us more details. Nigel?
Well, NMDC's numbers were disappointing. We already had the provisional volumes numbers, but that as well was lower than what we were working with. So we were working with a number of close to around 7.8 million tons or thereabouts. It came in at around 7.4 billion tons. So that was clearly a bit of a disappointment. And the realizations as well did come in much lower. In fact, realizations on a year-to-year basis was down by close to around 45%. On the top line, the reason for the miss is the Chhattisgarh volumes are not picking up. So that was one cause of worry. Moving to the margins, well, the problem out there was costs were higher. And the employee cost as well did spike up on a year-on-year as well as on a sequential basis, which hurt them. Keep in mind that the other income as well did pop up. So stripped of that, actually, the profit number would miss estimates by a larger proportion. Explains why the stock is lower, a top-down miss on NMDC.
All right, Nigel, thanks a lot for getting us all of the details. The stock is almost 5% lower as we speak. And another company which is suffering as much of a loss is GMR Airports. This was a seasonally weak quarter for the company. So Vivek is here to take us through the fine print. Vivek?
Well, absolutely right. So seasonally weak quarter, higher airfares actually weighing in negatively on the performance. Also, margins have seen a significant dip on a year-on-year basis. And however, on the brighter side, while it's a loss on the bottom line, it's narrowed on a year-on-year basis. So looking at the numbers, the gross revenues, however, while they were up almost 54%. However, on the back of the fact that the company now has to share part of the revenue as far as the Delhi airport is concerned with AAI, the Airport Authorities of India, the net revenues has actually gone up just around 17.5%. Reported EBITDA was down almost 5% on a year-on-year basis. Margins at 42% versus 52% again when you're comparing it annually. The loss this time around 210 crore versus the loss last time around of close to 530 crore. So losses have gone down on a year-on-year basis or narrowed quite significantly. So going forward, what the management is saying is that they are expecting some momentum on the back of the fact that newer routes as well as capacity addition as far as airlines are concerned. That is something that they look forward to. While there has been a significant growth in passenger traffic on a year-on-year basis, still slightly below pre-COVID levels, company also continues deleveraging with divestment of the stake as far as the Philippines airport is concerned.
Okay, well, thanks a lot for that. But IRCTC is the other stock that's under pressure. It's been a soft quarter for them. Mangalam is here with the details. Mangalam.
It has been a soft quarter indeed for IRCTC, and that's why the stock is lower in today's trading session. Depends on how you look at it. One would say that quarter on quarter it is a slow train, 5% decline in their revenues as well as the EBITDA, as a result of which an 8% decline in their profitability as well. But if you take a look at it year on year, there has been a 99% jump in their revenues. But that has meant that, despite that, the EBITDA has grown just around 44% and the net profit too has grown at similar levels. Why is that? Because the growth has been led by businesses which were only partially open the same time last year. Case in point, something like the catering business, which grew about almost 370% in terms of revenue this year. But with that, we also saw catering expenses grow from almost 228 odd crores to 280 odd crores. That's a low margin business for the company. The business that drives the margins for them, which is the internet business, the internet ticketing business, that was flat quarter on quarter, and year on year as well, the growth was just about 13%. Nothing really to write home about. The other business that did well for them was Rail Neer, which was the water business. Again, on account of a favorable base, grew by about 75%. But this too is a 7.5 to about 8% sort of margin business. So growth being led by margin draggers, whereas the margin supporter was the one which saw very limited growth, which is why the stock is lower in trade today.
Okay, thank you very much for that. Let's turn our attention now to the tyre space. Strong numbers, particularly from Apollo Tyres, Sonia.
Absolutely. There are two tyre companies I'm looking at, Balkrishna Industries and Apollo Tyres. Let me start with Apollo first because the stock is at a fresh 52-week high at the moment. And it's had a very good run today, as you pointed out. It's up almost about 4%. Now, the margins have gone up 40 basis points quarter on quarter. It's an all-round beat that Apollo Tyres has seen this time around. There's a sequential margin recovery in the European business as well. And that, I think, is something that the street will take with both hands, given the challenges that are there in the European market. There's an EBITDA growth in the standalone business in India. Now, that's important because its peers like MRF and CEAT saw an EBITDA decline. So, Apollo Tyres is standing tall amongst its peers, and the top line growth has also been very healthy for Apollo, over 17% growth. The only niggling worry for Apollo Tyres is the rising debt. So the debt in Q2 rose to 5,470 crores. This compares to 5,100 crores. So that's the only worry. Balkrishna Industries, very interesting there. The company has suspended its annual guidance due to the challenging macro situation. They say that they're unable to guide for annual sales volumes, and they also talk about how in Europe the situation is challenging and that may have an effect on their performance. There's also a downward revision in capex. They will achieve now a capacity which is reduced to 335,000 million tons per annum. And even the margins are under pressure. EBITDA is down 21%. Margins have fallen to 16%. So two stocks at the opposite ends of the spectrum. But Balkrishna has recovered from the lows, now trending in the green.
All right, Sonia, thanks a lot for that. That is a roundup of some of the stocks that we're watching after their Q2 earnings. But with that, it's time for our first short break on this show. When we come back, we'll shift focus to the world of commodities and